Toncoin is sitting at $1.44, and it's backed by an app that 950 million people already have on their phones. That gap between price and adoption is exactly what we're breaking down today. Because here's the thing. When you see TON down 4.5% on the day, most people just scroll past it. They see a red candle, and they assume the story is over. But the traders who actually make money in crypto aren't looking at the daily candle. They're looking at what's building underneath while everyone else is distracted. And right now, underneath Toncoin's price, there is a structure that looks very different from what the chart suggests on the surface. Let's start with the catalyst that's actually in play right now in mid-2026. TON's mini app ecosystem. These are apps built directly inside Telegram that use TON as the payment layer, has crossed over 500 active mini apps, with transaction volume growing quarter over quarter. The number of unique on-chain wallets crossed 35 million earlier this year. For context, Ethereum took years to hit wallet numbers like that at a comparable stage of its ecosystem build-out. That doesn't mean TON is Ethereum, but it means the usage is real, it's compounding, and the price at $1.44 is not reflecting that growth yet. If this is helping you connect the dots, subscribe to Crypto Sayans. We break down moves like this before they go mainstream. Now let's make sure you actually understand what Toncoin is, because there's a lot of confusion about this one. TON, the open network, was originally developed by Telegram's own team. The founders had to step back from it under SEC pressure back in 2020, but the open source community picked it up, rebuilt it, and today it operates as an independent blockchain with Telegram as its primary distribution channel. Think about that for a second. Most blockchains are out here spending hundreds of millions of dollars trying to get users. TON has a built-in gateway to nearly 1 billion people through one of the most used messaging apps on the planet. Every time someone uses a Telegram mini app to play a game, send a payment, or tip a creator, TON is the rail running underneath it. That's the problem it solves. It's turning a messaging app into a financial layer without asking users to download a separate wallet or learn what a seed phrase is. Frictionless crypto adoption, and it's already happening. Now let's talk about where this price could actually go, and I'm going to give you real numbers with real reasoning, not just hopium. TON's all-time high was just under $8. It's currently at $1.40, which means it's roughly 82% below its peak. For TON to reclaim that all-time high, you're looking at roughly a 5x from current levels. That's not a crazy number for a top 25 coin in a bull cycle, but the more interesting near-term level is $3.20 to $3.50. That's a resistance cluster that lines up with previous consolidation zones from late 2026, and it's the first real test this coin needs to clear to establish a new trend. If TON can hold the $1.20 support and push through that $3.20 zone in the back half of 2026, the path to $5 becomes structurally viable before the end of the year. On the institutional side, it's still early, and that's actually the opportunity. TON doesn't yet have the kind of deep institutional presence you see in Bitcoin or Ethereum, but Pantera Capital flagged TON's ecosystem growth earlier this year, and several Asia-Pacific crypto funds have begun accumulating quietly in this $1.20 to $1.60 range. When institutional money is accumulating at your current price level, you want to know that. The on-chain data shows large wallet addresses. Wallets holding over 100,000 TON have been increasing their positions since May. That's whale accumulation in the zone you can still buy at retail. But I need to give you the other side of this, because if I don't, I'm not doing my job. Here is the honest bear case for Toncoin. The single biggest risk is regulatory. Telegram operates in a global gray zone. It's been banned or restricted in multiple countries over the years, and if regulators in a major market decide to crack down on Telegram's financial layer, TON takes a direct hit. That's not theoretical. That's a real overhang that smart money is pricing in. Second risk, ecosystem concentration. Right now, TON's growth story is almost entirely tied to Telegram. If engagement inside Telegram drops, or if a major competitor launches a rival payment layer, TON's moat shrinks fast. Third, token unlock schedules. There are significant validator and team allocations that continue to vest through 2026 and into 2027. Every major unlock event is a potential selling pressure moment, and you need to have those dates mapped before you size into a position. If TON loses the $1.10 level on a weekly close, the next meaningful support doesn't appear until around 75 cents. That's the floor you're managing against. So here's my direct take. Toncoin at $1.44 is one of the more asymmetric setups in the top 25 right now. You have real adoption, a built-in distribution network that no other blockchain can replicate, whale accumulation at current levels, and a price that's still deeply discounted from its peak. The risk is real. Regulatory and ecosystem concentration risk are not small, but the risk to reward at this price, with a stop below $1.10, is one of the cleaner setups I've seen in this market in 2026. This is not a coin you throw your life savings at, but if you've been watching TON from the sidelines and wondering whether the window is closed, the data right now says it hasn't. The $1.20 to $1.60 range is where the smart money is building positions. You're still in that range today. Watch the $3.20 level. That's your signal. Break above it with volume, and the $5 conversation becomes very serious, very fast. Subscribe to Crypto Sayans. We break down the top coins every week, so you never miss a move like this. Hit the bell, because the next one is already in the pipeline.